Title II, Title III, TCF and A. It can be a baffling landscape, but raising money online is fast becoming an essential tool for the developer. My guest today is Mark Roderick, the crowdfund attorney. He is one of the foremost experts in the field, and like all experts, his explanations make the complexities seem simple. Welcome to the National Real Estate Forum podcast, episode 207. Thank you for joining me today. I am Dr. Adam Gower, and this is the Crowdfund Project at nreforum.org, where developers, investors, and industry leaders share insights that you can use to raise capital and invest in crowd-funded real estate deals. Crowdfunding real estate is really just the difference between today, when you can advertise to raise equity for your deal online, and yesterday. This may seem like a trivial difference, but in fact, it is epoch-defining. Think about it. Yesterday you could only go to friends and family to raise equity capital, but today you can put up a website, invite the whole world to take a look at your deal, and ask them to send you a check. For the investor also, it adds a completely new asset class to the portfolio options you have to invest in. When you buy a stock in a company, for example, you are buying a small piece of that company alongside thousands or millions of other people. This is really nothing more than crowdfunding company ownership. Well, today you can invest in real estate deals in a very similar way as you can invest in company stocks. Yes, the risks and characteristics of the two are different, but the process of investing online is very similar. You take a look at a real estate deal, just as you might look at a company stock, and if you like what you see, you click, I agree, and you buy a small piece of that company, or, in the case of real estate, of the deal. And that is why the National Real Estate Forum is here. On the face of it, the process is very simple to invest in real estate deals online, but really it is too easy to click yes and invest. To help you figure out how to raise money and invest in real estate online, I've published an introductory course online. In it, I give you an overview of the background to crowdfunding real estate, share a few insights into what to watch for, and provide some resources for what to do next as you look for deals to invest in. Go to the nationalrealestateforum.org website to nreforum.org/primer for more information. Another amazing source of information about crowdfunding real estate is my guest today, Mark Roderick, who is the crowdfunding attorney. When I first started looking at the world of crowdfunding real estate, and after conducting a few days of obsessive Google searching, one name popped up more than just about everyone else's, and that was Mark's. He is among the best connected people in the industry and one of the most knowledgeable about the regulations, and it is a great pleasure to have him join me today. I'm interested to know, what is your background and how did you migrate to this intersection of real estate and fintech, specifically crowdfunding real estate deals?
Well, it was a very natural progression for me. I've always represented entrepreneurs and real estate developers in particular. Way back when, in the dark ages, I actually began life as a tax lawyer, and in particular, a tax shelter lawyer.
Okay.
We used to have these things in the U.S. called tax shelters, where you could make good real estate investments, and your investment, in some cases, could even pay for itself right up front because of the tax savings, because these were called tax shelters, and that was where I began my career.
That was around the same time as the Securities Act, right?
No, it wasn't in the 1930s.
Oh, okay.
It was in the 1980s.
Right.
But all that went away. But so ever since, I've been representing entrepreneurs and developers, and of course, both those groups of people. One of the things they're always interested in is raising capital. So I've been helping folks raise capital for a long, long time. And when the Jobs Act, which of course created crowdfunding, came on the horizon, I said to myself, this is super cool, but two, this is going to transform the American capital formation industry because it's just about bringing the internet into capital formation, something that we haven't been allowed to do for 85 years, by publicly advertising private investments. So I just said this is going to be transformative, disruptive, awesome, and I decided that I would become the world's expert and started to do speakings. So it for me it just was a very, very natural outgrowth from what I've always done, and what I think is probably why it has worked so well for me.
Now, the Jobs Act wasn't specifically oriented to real estate. Was it kind of accidental that it applied to real estate, do you think? Do you do other than real estate crowdfunding deals?
I do, but as you know, I'm sure, probably 90% of crowdfunding is still real estate. When the Jobs Act was enacted, interestingly, I think most people actually thought it was kind of a Silicon Valley phenomenon, and we were going to see lots of high-tech companies and, who's going to be the next Facebook kind of thing. Right. And in fact, that's what the first sites were really about. And I actually wrote a blog post way back crowdfunding. For one thing, unlike, a social media startup, the investors investing from 1,000 miles away, they can see a picture, it's an apartment building or it's a house or something. And right around that time, certainly not because of my blog post, but right around that time, I think Realty Mogul was formed, perhaps. They might have been the first, and suddenly, not only was real estate included in crowdfunding, it really has immediately came to dominate the crowdfunding space.
Does it really, in dollar terms? Like companies like Kickstarter and others like that are small in comparison? I thought those were...
Well, I'm not including Kickstarter and I'm not including Indiegogo. Those are, donation-based sites where companies come to potential donors with their hands out and say, give me some money, please, because I'm a nice person and I have a great story. So I'm not including those companies, only including what we refer to, for lack of anything better, as equity crowdfunding, where companies are actually issuing stock, giving people something for their money, that is, making people investors rather than just donors. And in that space, yes, I don't have figures, but dollar-wise, by volume, real estate is by far the dominant,
the biggest beneficiary
sector.
You talked about it being transformational. So, what do you think ultimately that will look like? Right, when the industry is matured, what do you think it might look like for the real estate industry? It's matured. What do you think it might look like for the real estate industry?
Well, I think it's going to look pretty straightforward. I don't think it's hard to speculate about what it's going to look like, because it's just the internet, and whenever the internet comes to an industry, whether the travel industry, or the dating industry, or the automobile, the taxi cab industry, the hotel industry, what does it do? It directly connects buyers and sellers and gets rid of middlemen. So traditionally, private real estate transactions are financed through lots of very, very inefficient and opaque private networks. Who do you know? Who does your father know? Who does your friend know? Who does your lawyer know? All those things. And the internet, this is just a normal thing. None of that matters anymore, because now you can connect directly with your customers. And for real estate developers, that means investors. So what is happening now, and what will continue to happen, I'm sure, is that as the word gets out, as the public education process continues, just as if you were going to travel tomorrow to San Francisco, the first thing you would think of is, let me go online, whichever site you use, Expedia or Kayak. Within a few years, 5 years, when a real estate developer wants to raise money, he or she will, the first thing that will come to mind is, let me go online. Let me get listed on a crowdfunding site. It just will become the normal way to raise capital. That's what's going to happen.
Do you think it will replace the private equity channels? That guys will go to, instead of going to private equity groups who are funded by pension funds and insurance companies, etc., that they will be bypassed and find it harder to locate deal flow?
Well, this is what I think will happen. And again, this is not, Mark Roderick being a brilliant soothsayer or anything. But when you look at other markets that the Internet has penetrated, what happens is the Internet, of course, first picks the lowest hanging fruit, and then it picks a little higher hanging fruit. There's always, at the top of the tree, there's always fruit that the Internet doesn't pick. And in real estate, whether that means you probably don't need travel agents that specialize in ultra luxurious private jet, vacations. Right. And in the dating market, just to pick another, yes, there's Match.com and eHarmony, but at the very highest end, wealthy people pay a lot of money for private dating services. So in the real estate market, the sweet spot now is maybe raising a few $1 million for a developer. That will go up and up and up. At some point, however, it won't go up anymore because the efficiencies that the Internet is bringing to bear on the market no longer matter at a certain level. That is to say, if you're the New York developer who put up the New World Trade Center, right? That market, if you're raising billions of dollars, that market is already a very, very, very efficient market in the sense that everyone has access to the same information. Everyone knows who the players are. So the Internet doesn't have much to add at that level. So, no, private equity firms won't be driven out of business. They'll just see, as banks have seen, they're what used to be the bank's sort of core consumer lending and small business lending is increasingly being encroached on by crowdfunding-based lending. So the private equity firms will see their lowest hanging deals, I think, disappear, and they will move up market. That's just what happens when the Internet comes to an industry.
For a summary of today's episode, as well as a downloadable transcript, go to the show notes at nreforum.org/crowdfundattny, where you will also find a link to Mark's website. From the sponsor perspective, is it less expensive to crowdfund a deal than it is to go to a private equity fund where you are paying this extra level of promotes and fees before you actually access the capital which is flowing through from institutional funds?
Right. Well,
is it less
yes,
expensive?
I think so. In the aggregate, you will, it's of course hit or miss, and I'm sure you could find a deal if you looked hard enough where someone paid more in a crowdfunding deal than he or she would have paid to private equity. But by and large, you were absolutely correct. The crowdfunding world sort of started with some developers, going to a meeting in New York to meet with the private equity folks for the umpteenth time and coming back and saying, we're just not doing that anymore. We're not dealing with those guys. So, yes, many of my clients who are developers doing real estate have told me, sure, I could get this deal funded by private equity, but I can get a better deal from the crowd. There's more money to split around.
Well, that's exactly what I was going at as far as, the kind of impact it's going to have on the private equity world, right? If the deals find it more economic to go to crowdfund resources than they're going to steer away from private equity.
Well, I was just going to say, yeah, particularly at the lower end of the market. At the higher end, where the World Trade Center building, there will be enough private equity firms competing for that deal that it becomes very, very efficient. So that's the kind of big picture difference. There are efficient markets and there are inefficient markets.
All right, so let's talk about the major challenges, in your view, that face the industry today as far as its growth trajectory. What do you think is holding things back at the moment?
I think investor education is certainly what I would say is number one. Crowdfunding, particularly the kind of crowdfunding in which ordinary investors can participate, is very, very, very new. And with everything else, we're all every day deluged with information about every aspect of our lives. It just takes quite a long time, and I think will take time, for information about the crowdfunding opportunities to penetrate or scale. It's sort of no one knows, everyone knows. So it's not going to be linear. People find out, hear their neighbor talking about it. I was able to get that kind of return. But anyway, so I do think.
Well, that's a different thing, though, isn't it? You're talking about awareness of the opportunity versus understanding the deals. To make that distinction, which are you talking about? Actual awareness that you can invest in real estate through a crowd-funded website, or once you actually figure that out, being able to understand what it is you're looking at?
Now, I'm talking about just that first step. I speak very, very frequently. My audience probably says too frequently, but I speak about crowdfunding very frequently. And, I'll start by saying, tell me, raise your hand if you've ever heard about crowdfunding. And depending on the geographic area, some people have not heard about crowdfunding at all. And then I'll say, well, have you heard about Indiegogo and Kickstarter? And it turns out that when people have heard about crowdfunding, that's the only kind of crowdfunding they've heard about. So this is still something only at the far edges of public consciousness. So I'm talking about the very first aspect of your question. People becoming aware that they can invest outside, their ordinary choices they have, their, mutual funds and their pension plans.
Right.
So that's the biggest impediment. And after that, there are other impediments to the growth of the industry. I think all of which are to the growth of the industry. I think all of which are pretty transparent if you start checking around real estate crowdfunding sites. The sites can be better. The consistency can be better. The ability to compare apples to apples can be better. The explanations can be better. I always say we're in crowdfunding, we're where the car industry was in 1914. It's just right at the beginning, with almost all of the innovation yet to come. So we have a long way to go.
Okay, so now I have taken the liberty of listening to some of your speeches and presentations, and there was a couple things that you've mentioned. One is standardization of contracts. Again, I'm taking this from the investor perspective, right?
Yes.
That you have I think innovation you've made, 150-page PDF of which you see a quarter line, right? With a agree, click here, invest now button next to it.
Yes.
And you've talked about standardizing contracts. I'm not sure if that's something that you're still working on, but I'd be interested to hear more about your thoughts, how to standardize contracts to make them easier to understand for investors once they have an awareness of crowdfunded real estate and want to invest.
Right, and there's no, there's no way to impose it. Right. It has to be voluntarily adopted, but the benefits to investors, I think, are clear. People have a hard enough time understanding the differences between two real estate investments without, on top of that, needing to understand the differences the differences in all the, 100 pages of legal documents that go within each real estate deal. And these things, there is no reason at all for deals to have different document sets. They really should be standardized. And what I'm hoping to accomplish is, if I make available to, the top sites, if I can call them that, and I can make a pitch, then, maybe they now, at some point, sort of the top sites, and certainly Real Crowd being one of those, CrowdStreet being one of those, they start to have enough market package, because that makes it easy for investors. And
it also makes it easy. It also makes it easy for a sponsor, doesn't it, Mark?
It does.
Think about it. Here, I've got a deal. I'm going to go online to this website, and they've got a checkbox contract that I can use. Right?
Yes, absolutely. And I said that what the internet does is squeeze middlemen. Well, in private real estate transaction, among the many other middlemen, there are these people called lawyers, securities lawyers. Yes. And they're, unfortunately for us, the securities lawyers, but fortunately for the market, there's a lot of money that gets spent on lawyers in private real estate transactions that does not have to get spent, should not be spent. And the internet just has this way of finding inefficiencies and kind of pointing the finger and say, you're getting paid too much for this. So,
right.
That is definitely going to happen.
But you're not setting a precedent, right? I mean, I do or have done a lot of commercial real estate brokerage in California, and there are standardized contracts that are checkbox contracts, right? That the California Association of Realtors put them out.
Yes.
So there's no reason why it shouldn't apply also to development. That's the case that you're making, right?
That's right. And, the crowdfunding industry is brand new. The residential real estate market is very, very old. So we're not going to see this standardization all happen tomorrow. But it should happen, and anything I can do, to help it happen. No one can make it happen, but to help it happen. No one can make it happen, but to help it happen, I want to do, because that's good for the industry.
Tell me something about investment advisors, something else that you talked about as being desirable from the investor perspective is an investment advisory role. What does that look like, Mark?
Well, it looks pretty traditional, actually. One of the hard truths of crowdfunding in general, real estate crowdfunding in particular, is that even if you were able to standardize all the documents, and even if you were able to standardize all the disclosures and make the disclosures easy to read, which that's another whole issue. But even if you could do all those things, how many investors know how to distinguish, to choose one real estate deal over another? How do you choose an office building in Los Angeles over an apartment building in Austin, Texas? How do you do that? And I think the truthful answer is that most people can't. And I know the answer for me, Mark Roderick, is that I cannot. I have represented real estate developers for many, many years and done lots of real estate deals. And Mark Roderick cannot choose one over the other. So
How do you make your decisions then? What does factor in your decision to invest in a crowdfunded real estate deal? Is it the guy that's doing the deal or the platform?
Two things. The portal that's selling the deal and the guy or the gal. In real estate, it's almost always the guy for some reason, or the gal. In real estate, it's almost always the guy for some reason. But
right.
The portal that's selling the deal, the guy who's doing the deal. I have the tremendous advantage of being able to work with all these folks and get to know them very, 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 very well. And that's not an advantage that almost, anyone else has. So I have said from the beginning, and as you know, you've read my blog, I continue to say there's a lot of room for investment advisors in the crowdfunding space. I'm not sure there is any investment advisor yet that is specializing in that space, but it would look like a traditional investment advisor. You're going to allocate a certain piece of your portfolio to private real estate investments. I'm going to help you choose among all the alternatives. So that's what it would look like, and it doesn't exist yet as far as I know.
What do you think will be the impact on the industry as you see it currently of the next downturn, the next real estate downturn?
Well, there will certainly be a shakeout. I'm concerned as to whether some platforms, good platforms, can survive a downturn in the sense of, they depend on the cash flow from doing deals. And what happens in downturns, although you can say to investors, this is the time when you should be investing, prices are cheap. We all know that's not what happens. Everyone, adopts crowd-like behavior, and everyone a cut to people's cash flow, and I hope that all the best platforms can survive. I'm a little bit concerned about it, but I think the weaker players probably will not survive. And
you're also going to see investor losses as well, right?
We are, yep, and we're probably going to see lawsuits. Maybe some of the things where people have pushed the envelope a little too far and rounded the corners and whatever metaphors you want to use. When people lose money and, there are plaintiffs' lawyers around, so we are probably going to see lawsuits, and we're going to get negative press. People are going to say, oh, you lost money in these crowdfunded deals, and we will be able to say, yeah, but you lost money in the Dow also. But
right.
The way these things work, there will be a public relations down. Look, will get a little skeptical, but it's just, normal business cycle. Because I view this as it's just the internet, it's inevitable that the internet is going to, come to dominate the capital formation industry as it dominates other industries. It's going to be a temporary down, and then the industry will pick itself back up.
And what are your aspirations in the industry long term?
I have a wonderful professional life. I get to do very challenging, fun stuff, sort of charting new territory all the time and dealing with very, very good, exciting type A personalities charting this course. My professional, my hope is that when I retire, I look back at this brand new thing and it's working, and capital has been more democratized than it was before, and sponsors are getting better deals and investors are getting good deals, and I can say, yeah, I helped in a small way build some of that. Would be wonderful for me.
Very nice. Thank you so much, Mark.
Thank you very much. It's been a pleasure speaking with you.
Having raised money through private equity funds and having run a private equity fund myself, I find the idea that crowdfunding deal equity provides a viable and less expensive alternative to be fascinating. Not only is the cost of capital reduced, but the restrictions on sponsors typically imposed on them by private equity funds can largely be eliminated. Of course, this is great for the sponsor, not so good for private equity funds who are going to have a harder time competing for deal flow, and clearly it also adds an important layer of due diligence to watch for the investor. Mark is very generous in how he shares information about this new industry of crowdfunding real estate, and I would like to recommend you use his site as a resource whenever you have questions. There is a link in the show notes to this episode that you can find at the nationalrealestateforum.org website at nreforum.org/crowdfundattny for attorney. In next week's episode, I have the pleasure of interviewing the first person I've ever spoken to who is looking to earn a 1000x multiple on his real estate investment, Alex Rampell, General Partner at the venture capital fund Andreessen Horowitz. In a world where most real estate investors consider a 2x return on their capital good results, Alex's aim to hit 1,000 times might seem a bit wacky, but remarkably, he might actually do it. Tune in to find out how and why this could be possible. You can find links to subscribe to the show on the nationalrealestateforum.org website, nreforum.org. At the bottom of the homepage, there are links to all the major podcast platforms. Last thing, remember to get your free primer on crowdfund real estate at nreforum.org/primer. It provides a roadmap for how to finance and invest in real estate deals. Thanks again for tuning in, and thank you also to Mark Roderick, the crowdfund attorney, for sharing your time with me today. Until next time, this is Dr. Adam Gower.